Hey everybody, welcome to Market Mavericks. Looks like Mike dropped off for a second, but he'll be back on in just 1 second. I'm here with Scott Melker. How are you, Scott?
I'm doing well, man. How are you?
Very, very good. Wow, it's been quite another wild week. We've had a week of a ceasefire agreement, a little bit of a question mark of, is it going to hold in 2 weeks? Will it still be there? Will it be extended? Right now, honestly, the stock market doesn't care much. It is rallying higher. We've seen quite the move up. I think close to 8% on the S&P from a low last Monday. And I guess the question I would say to you, Scott, is, do you think that this rally is sustainable? Can we get back to all-time highs, or are you thinking it likely won't get there?
Oh, the S&P is what, 2.4% off the all-time high right now? It could get there before close. I don't think it will, but the question, can it get there? I think when you see how crazy this market has been, it obviously can. To your point, on Monday, what was that? The end of March, the 30th, we are at 6,300. Now we're back at 68. This is absolutely crazy price action. But yeah, you can see there. That's a 2.3%. As you said, dropping back here, that was 9.8% off the highs on the SPX. So, we went from 10% down to under 3% down in just a matter of days, gapping up, clearing resistances. It's just crazy. I don't get it.
Is that red line the 200 MA?
That's the 200 daily, and the blue is the 50 daily.
Wow.
So we're back above both, and it gapped both yesterday, right? So, just really, really strong technical move there.
I think my one concern on this is that, we're back to almost all-time highs, and oil is still in the mid-90s to $100 a barrel. And I would argue that oil's not going to come down as fast as people think, even if there's a deal done. And the reason I say that is this, and Michael, I want to hear your kind of perspective on this, is that if you're a country and you just went through this shock and this craziness, one country, Iran, was able to shut down basically the energy supply for the entire world, driving prices up essentially 100%, right? We were at $60 a barrel going into this. We topped out at 120. If it comes back to 80 and I'm a country that spent a lot of or expelled a lot of reserves, I've got to start buying reserves, right? And so all of a sudden you create this country scenario where a lot of countries are going to start being a bidder, probably around $80 a barrel. And we have to keep in mind that that's still 30%, 33% higher than where we were in February. And I would dare say that, does that mean that inflation is longer lasting than people are thinking, even if a deal gets done here?
Well, I think that's a decent scenario, but it assumes one key factor: the stock market has to continue going up. So I'll be publishing tomorrow. Demand destruction is a done deal. We know that it's the wealth reversion that I'm most significantly worried about. And that chart you showed earlier, so I look at this as a chance. I look at this as a year that all that volatility we seen in gold and precious metals, and all that volatility we're seeing in crude oil, we virtually never had zero that not trickle up to the stock market. So on the year, S&P 500 total returns unchanged. So I look at this, okay, this is a chance to sell, prove me wrong, maybe take out 5%. And if by the end of the year, or certainly a certain point, you drop 10, 20%, all the dominoes tumble. So I stick it with my call. And I think by the time we get to midterms, WTI crude oil is going to be closer to 50 than 100. And I did enjoy, I was on live TV today, and they said Goldman Sachs is calling for $100 by the end of the year. But you have to look at the binary model of crude oil staying up. If we're at 100 by midterms, that is basically a global recession, the U.S. global recession, major significant inflation in the U.S., Republicans getting hammered in the polls, and Mr. Trump's legacy destroyed, and then probably a good chance that we're going to have the next president be a Democrat, and maybe for many years. This is pretty significant stuff, because it means the whole world's tilting towards a significant energy crisis and recession. The other side of the binary model is $50. $50 is normal reversion. The leader of the world's most significant energy producer, net exporter, has the ability to make crude oil go lower. Depends on how he does it. This is a bit of an aberration at the moment. Strait will be open, and he'll figure out a way to do that. And it also helps him in the polls. It gets everything he wants: lower energy, lower interest rates. The problem is, I think it's going to come with a recession. So, and lower stock market, which is the recession now. That's the key thing. This reminds me a lot of 2008. Crude oil peaked around 147 in July. CPI peaked at 5.6% in July, and by the end of the year, crude oil dropped to 32, and CPI was negative 2%. I think by next year, CPI is going to pump up to 3.4%. When we print tomorrow, according to Anna Wong, and I think by next year it's going to be zero. That's just the way it works. The bottom line is stock market has to stay up now because everything is so dependent. You look at copper, look at silver, gold. They're just all completely, and certainly cryptos and Bitcoin. That stock market has to inch higher. It drops 10%, dominoes tumble. So I look at this as a tremendous trade. Sell, prove me wrong, stop me out with the 5%. And by the end of the year, look to make 20%, not so much short it, but because that domino tumbles, everything falls.
Yeah, and what I think, and Scott, I'm curious about you, but this is the human psychology aspect too, right? And it's always so amazing to think about how people are conditioned to, number one, buy the dip, but what was happening exactly 1 year ago that probably makes people even more aggressive to buy the stock market right now. I mean, look at the bottom we had last April and the move that it had. So in people's minds, you're conditioned to say, oh, well, just jump in. Who cares what others going on? Because look at what happened every time since COVID with this V bottom recovery, and it just goes to all-time highs. And I think that's my bigger concern, is that at some point you condition so many investors to believe it. And I've learned this the hard way. When I join a trade that everyone else believes in, and listen, if you bought Bitcoin at $127,000, you're kind of in that group with me. And what I've done in the past in my early trading career, especially, is the market always goes the opposite way of the masses. And so if everyone believes we're going to new all-time highs, I do wonder if it's a fake out,
Yeah, I mean, I agree with that. The thing is, Mike, I do think that there's an in-between those binary models, which is that the Republicans lose the midterms, which I think is going to happen regardless. Right, I think Polymarket now handicapping them losing both houses. Obviously, the House of Representatives are much more likely, and then things, somehow even out in the next 2 years, and the presidency is not necessarily determined by $100 oil in 2026. Right, so I think the longer-term prognosis there, I don't know, is exactly as you had it. Although I do agree with those sort of at the extremes. But I mean, I do agree that there's going to be much more long-term consequences than just open the straits. But first of all, the straits aren't open. Second of all, it appears that the nature of the straits will be very different moving forward, and there's probably going to be a toll booth. I mean, they're saying that as a part of sort of the ceasefire agreement now. And I actually read, I was trying to look for it while you were talking, but I saw a report today that Saudi Arabia is only able right now to export 600 to 800,000 barrels a day, not because of the straits, but because of how much their capacity has been reduced by the attacks on their actual infrastructure and on the pipelines and such. And they were doing, I think, 10 to 12 million a day. So this isn't just like the straits open and oil starts flowing. I think there's been a meaningful reduction in capacity because of the bombs.
Yeah. And I think that's, at least, for me, at least, I think that's my bigger concern, is that, if everyone is assuming oil prices are going to come cratering back in, but, you look at the 10-point plan and the differences between the U.S. I mean, basically, if Iran gets its way and can do a toll, basically controls the straits now, can enrich uranium, can basically all of these other things, what was this all for? I mean, it kind of comes out a little worse for us, right?
Vibes.
Well, that's exactly. Exactly. So that's what's happened. Right now, Trump broke it. He's got to fix it. And he knows if he doesn't fix it, first of all, his legacy is destroyed forever. We all point out that politically it's against him. Remember, I heard a quote today from a good friend, Tony Ferreira, who gave you a great compliment. Gareth is one of your best traders ever. I'm at the Money Show in Hollywood, Florida, and his quote was, Trump's polls right now, he read, are lower than Nixon's at the bottom. So this is a psychological shift. This is what I remember in 9/11 in 2008. We just shut off the world economy. Not only who's going to make capital budget decisions. The classic example is the conversation we have. Hey, honey, you better lay low on the spending for a little while. Also, this has happened at a time when people are starting to worry about AI, and now they're getting hit at the pump. This is a classic shut it off. And we're going to see that in a little while. We'll see that data in the future. That's why I think the stock market's a little bit delusional right now, and it's like, oh, it's only going to be great. To me, this is the big one. It's the psychology of it. Remember, we were pretty bad already in with consumer sentiment before this hit, and now You look at your gas price and diesel. The price of diesel is near an almost all-time high. It's almost a 560 before this happened. It was 350. That's the grease of the global economy. So I'm calling this as, oh, you just gave us a chance to sell into a decent rally. And the indications are there. Remember what gold did last year? That was a major warning. We've never had gold rally at that velocity without the stock market heading back lower. That's been the key indicators. And Bitcoin rolling over, to me, this is the signals are there, the opportunities are there. And in a few months, if the stock market stays up, oh, prove me wrong. But if it drops down here, so to me, this is the flip of the switch, and it's global.
Scott, what do you want to say?
I realized I didn't really answer your question, but I do agree with you that people are just conditioned to buy every dip. I mean, it's pretty insane that you see what's been happening in the world, and we got a complete V-shaped recovery off that 10% drop.
It is. It really is.
Yeah.
And I wanted to, sorry.
Take the chart back to last year. This is what I've been worried about since. This is a year ago, right? So see that dip to the bottom line, that in rally was the fastest ever. Gina Martin Adams told me we've never dropped 20% and recovered that fast. To me, that's what's happened is people are so conditioned it's that easy. And look at the other one before. It goes down and stays down. To me, that dip, technically, I look at that, we're going to take it out. It's psychological, it's technical, and then I have all these other indications what's happened in gold. And then it's a pump and dump things happened this year. We've had a pump in Bitcoin, back down in the air. We had a pump in natural gas, back down in the air. We had a pump in copper, down in the air. Silver's up 60%, back to near unchanged. Pump in gold, the pump and dump contagion, I think, is just waiting for a trigger.
Now, obviously, the dumpers aren't retail, right, Mike? I mean, we're not, the average person's like, hey, you just buy every dip, index fund. I mean, how many times do we hear index fund? Just do that and you'll become a millionaire, right? It is a concern of mine that's lulling people into that false sense of security, right?
Does it sound like Bitcoin above 100,000 last year?
Because it was going to go to 1 million, right?
Well, that's the key thing. And also look, but it's the sentiment in the psychology. Think of what happened. We had a pretty significant euphoria into this election, and now we're finding out most people in this country, like I said, are very upset with their president. They're really upset what's happening. They're becoming quite despondent. This is a classic sign that all you need is on it trickles down. But to me, I love how the French say it's psychological. I lived there for a while. It's a psychological thing now. But the thing is, what's happened in crude oil, when it rallies like this, it breaks stuff. And it's breaking stuff. So it's clearly demand destruction. I mean, the price of diesel in Europe going to $200 a barrel this is global. And even if it's recovered overnight, the Strait of Hormuz, I just look at it as here's one example. This happened in 2002 in energy, and natural gas was a great indicator. It went up to 10, and by the time it was in 2003, it got below 2. That's an example of what's happening in this country. What happens when you pump an asset that's very elastic like crude oil, it dumps. And this is a question of how long it stays. But this is a problem for the rest of the world. Less for US.
I have the chart up. I have the chart up here from 2007, the run to 2008, and then we obviously know what happened. And it's not to say that crude, and I think this is important. It's not crude oil that destroys the economy directly, but it puts pressure on consumers, which then when they stop spending, the whole the train goes off the tracks essentially, right? Other things start to show up.
And it's the uncertainty of this war. I mean, who's going to make capital budget decisions right now? It's like, okay, let's hang back and wait. And also, all the promises from Mr. Trump are thrown out the window. Unless he solves this, which he has to, he knows that in the history books, he's toast.
But I guess my question is, how does he solve it, right? I mean,
boots
on the ground, because he's not going to do that. But otherwise, it seems like Iran has the upper hand and just can say, hey, listen, if you want us to open the straits, then you got to give us what we want.
I really just don't understand.
That's called failure.
Yeah, I've said it 100 times. I wrote a long thread. I know that people think for some reason that I have TBS. I definitely have an anti-political bias, but I look at, and I do actually agree that this government can't tell you their reasons for doing everything, right? Obviously, I understand that point, which is the constant argument. But in my mind, we were told there were 3 reasons, right? Regime change, because they killed 40,000 people in the lead up to the war, that they were close to getting nukes, and even more, right? Disarming them and their funding for terrorism. All those things sound incredible. But if you look at a scorecard of where we stand on those things right now, you can't really view any of them as success. And I don't think that's TDS. I think it's like looking at the facts. And yes, I don't believe what Iran says. I don't believe that like their declaration of victory and those things are true. But I mean, factually, we didn't even talk about oil. That's messed up. The guy's son is in power, and they've made it clear that they're negotiating with him. He's making the statements about it. There's been no regime change. If we bomb them back to the Stone Ages or destroy their civilization, which maybe are just empty threats for negotiation, I'll give you that. But that hurts those citizens that we were trying to protect disproportionately more than it hurts the regime. And Iran, although I don't believe them, is out here saying that they're 10, points to getting this war over with, and the ceasefire is that they get to continue enriching uranium.
Right.
So the whole idea is they were supposed to bomb them into submission, and that hasn't happened. The tenacity of the the regime is amazing. So what's Trump's option right now? Okay, a little ceasefire right now, and go back to say, okay, one thing we know America can destroy stuff easy. Rebuilding it's a problem, but so far this has been a challenge. I think I don't know how it's going to resolve, but I think the only solution for him is, okay, pound them harder until they can't have offensive ability and can't disrupt flows in the Strait of Hormuz. And so far that's failed, but that's the key thing, is that failure is the trigger to point out that this is a problem, bigger problem we think, and how we're going to solve it.
Yeah.
But it's bad for markets.
And I think it all comes back to, it's the economy, stupid, as the old saying goes, right? That's what Trump is up against, and he can't. Think about the Republicans, right? They're whispering to him and saying, "Hey, listen, if you don't, number one, he promised no new wars, so that's gone. Then what about the oil prices coming down to the lowest that they've ever been, or whatever? It's really looking bad for these midterms. And the midterms, the thing is, Iran doesn't have to worry about elections, right? I mean, so what do they care? It's like China. China can play the long game because they don't have to get reelected, but the U.S. can't. And that's the issue here. And that's where the upper hand is given to these opponents of the U.S. It's wild stuff.
If we bomb their infrastructure, their power plants and desalinization, we're just going to have 2 more generations of people that hate the United States and think that we're the great Satan, and we'll catalyze all of the people that would have been on our side against us. And it's not like theory. We've done this over and over and over and over again. That's how we got bin Laden, right? So it's a very strange playbook that we know how it ends. So I don't see a way out of this that looks like victory, sadly. But I hope it just ends soon.
Yeah,
but that's a key point, because we all know the hyperbole from Iran is obnoxious, and they're doing it very well. But the point is, people are despondent with what's coming from our leaders' mouth. Like, it's just they don't agree. They just don't believe him anymore. That's this is. I mean, we got a long time. The rest of this year, things that just started to happen gave us some great indications. In my base theme so far year, that stock market volatility will go up. It's still wrong. And I'm like, okay, here's your chance. Put it on, test some shorts and SPOOs, and prove it wrong, because that goes down, everything goes down. Before, it made sense to try to sell Bitcoin around 100 and silver around, Bitcoin around 100, silver around 100, copper around 6. So put a trading hat on it. To me, this is an environment. And now what happened again this recently, got that bond yield up in there 5%. That thing goes above 5%, it breaks stuff. I think you just get a normal version, it drops to 4%. And I see that in natural gas pumping up against 5 in that January contract that potentially go. Even corn pumping up against 5 and potentially going lower. This is everything connected now.
Yeah, it really is. And you're right. I mean, it's so interesting. I was marveling at this, how, you have natural gas basically at 52-week lows while oil is up. And again, it just shows you that there's obviously a disconnect there. But it's very unusual too, to see not a bigger move up in natural, at least not a sympathy play to some extent. So yeah, it is wild stuff to see that. Now let's turn our attention.
But Garrett,
Well, it did earlier in the year, right? Or late last year.
It led the way. Yeah, it was up 100% in the year, but that's the thing. It did the same thing in 2022. Now, that's the front contract. That's why I tilt over to what's happened in the January contract. The January contract's the apex of the bell curve, and it's bumping against 5. I think, it's just an example of what's potentially expect in energy, particularly when everybody gets bullish after it goes up. It's a lesson you learn in elastic commodities, and people learn in elastic cryptos. If you're not in it before it goes up, it's best not to. And look to be a responsive seller.
So let's turn our attention here back to gold, silver, and Bitcoin, right? So gold and silver not doing a whole lot. The volatility, it almost feels like everyone's distracted by oil and focusing on oil for trading purposes. But if we look at gold here and we flip over to the gold chart here, you can see it's been trending up. But I also would point this out is that it's going with the stock market. Like that is not what gold is supposed to do, right, guys? And so that concerns me for its longevity of continued upside when it's acting like a risk asset. It shouldn't be, right?
So one thing I enjoy about gold is I've been to a few conferences on a few calls, and I did a webinar in Hong Kong in February. It's very almost so similar to sentiment compared to cryptos last year when I'm the idiot now because I was bullish before, not bullish anymore. What's happening in gold this year will be things I'll never be able to see again in my life. It got to the highest ever versus a Bloomberg commodity index. It got to almost a 50-year high versus its 60-month moving average. And it got to the highest versus a basket of treasuries in almost 50 years. That's why certainly when I spoke, had that little altercation with Larry Lepard, as I said, that's when you're supposed to be looking to sell gold and buy treasuries and just look for the trigger. But that's usually what happens at extremes. People write books about it. And then you get the trigger. So to me, gold's put in a high, at least this year, that lasts for a few years. It's going to knock around between 3,000 and 5,000 ever. It could get above the top and below the bottom, but just trade it. But the key theme now is, you mentioned it, it was a store of value. Now it's a highly speculative asset. It trades at 2.3 times the volatility S&P 500 on a 180-day basis. That's the most since 2009. Now that's why I point out everything's linked. If you're bullish gold, you got to be bullish the stock market. If you're bullish silver, you got to be bullish the stock market. Same with copper. This is a wonderful environment for trading, but it's the classic sign of the bell has rung for risk assets. So Bitcoin warned us last year, gold warned us last year, and now we're just waiting for that big boy, the good old beta S&P 500 to prove me wrong. And that's why I say, okay, you got a chance to sell.
Yeah. So turning to Bitcoin, Scott, for me at least, I see a small breakout that occurred on the chart here. You had this little downsloping trend line. We've now pushed above it. That's a good start, but needless to say, we got to take out this former pivot around 75,000. But are you seeing anything that's bullish? I mean, I feel like every week we're like, hey, is there anything here? Give us, throw us a bone.
I think it's less bearish. Does that count? I mean, it's up 10% since the war started. Most things were down or remain at least down since that time. I'm not sure if that's noise more than signal, right? But, we've all got this glaring line. You can call it 75, 74, 73.7, whatever it is. There's that big line on the chart, right? And you can zoom all the way back and see where it comes from. It was at highs from back in March 2024. It's been support before. Hard to celebrate much before we are above that. That said, I mean, when you look, the huge sellers seemingly are largely out of the market for now. I mean, I just think that a lot of the dry powder, a lot of the selling powder that they had before, they fired above 100, they fired it in the 80s, they fired it in the 70s. And if you look at the metrics, we have a situation now where actually those whale wallets have largely been accumulating, above 60,000 and not selling at the same velocity as they were before. Not saying that they're the only sellers that can be in the market. But, the chart, we're sideways and it looks bear flaggy, right? I mean, on the way up, you stop for a while, price floats down, volume goes down, and then you shoot up. On the way down, price goes down, then it floats up for a while, and you're actually trending up more time than you're trending down, even in the bear market, which is crazy, right? You spend more time getting here from 60 up to 70 something than the whole drop. And it lulls people to sleep and it makes you think that it's going up, and then you get the next drop out. That's why bear flags and bull flags exist. But in this case, I will say, when you dig in, retail is selling and institutions are buying, and it's not even close. I think in the first quarter, the survey was 69,000 Bitcoin added by institutions, another 20 by governments, or 10, 3,000 by ETFs, and 61,000 sold by retail.
Wow.
Right. So when you are looking for signals for an asset, generally, when you see the weekends provably selling to the stronger hands, it can be a sign that you are bottoming out. I don't think we're going up massively anytime soon, but I could see us chopping around 80 to 55 for the next 6 months.
Interesting. What were you going to say, Mike?
I had to publish on that today because obviously I'm getting a lot of pushback on it. I had to point out that just as we had predicted that the ETFs would mark the peak in Bitcoin, now Trump got elected, so that marked a bigger peak. But that was I think the high that's going to mark the peak in this whole bubble for a long time. And I just pointed out what typically happens. We had the best back test in history, and then it flipped over to becoming real time, and where people can jump on board in ETFs, and now the performance is absolutely sucked. And I point that out. That's why if you look at, and I pointed that out from a money management standpoint, the concept of an institution adding to that, this is a diversified portfolios. This is, as a money manager, I say, I'm sorry, but the performance is just horrible. This is a bad asset. Here's the example. The average price of Bitcoin since IBIT was launched now is 83,000. So everybody's on average is underwater. So that's going to be responsive selling. And the performance has been almost flat with S&P 500, about the same, both up about 50%, despite the fact that Bitcoin trades at 4 times the volatility and is highly correlated. From a risk management diversified standpoint, if it was negatively correlated, this is a major no-no from a risk manager standpoint. I even have one of those certificates. It's poorly performed. It's got a high volatility. It's not diversified in your portfolio. Basically, it's a real bad performer so far. And you can look back and say, well, look what it did the last 10 years. I'm like, yeah, of course, it was born. But now it was one, and then there's millions of different cryptos that you can allocate to. That's why I always say for an index. But the point is, from a factual, institutional standpoint, if I was sitting on any board of directors allocated, I'd point out the facts of this is what's happened. This is a very performing asset. It's not diversified in your portfolio. And by the way, if the stock market goes up, it might go up if history's a guide.
Scott, is there any positive movement on the Clarity Act? Like, where does it stand right now?
I'm not even sure we want movement on the Clarity Act. I'm really disillusioned with the entire status watching the process. And I'm not 100% sold that it's something we need in its current form, although people I respect very deeply believe that we've got to get it done. I don't really see it at the moment. We get these sort of sound bites and cheerleading from entities that have reasons to give us positive sound bites that it's getting closer, that certain entities have agreed. But first of all, can we talk about anything while there's a war going? Like, is this really going to, I don't see Clarity or otherwise, or agriculture, you name it. How are these things going to be a priority when, we have a war going on? So I think that we had the government shutdown really stopped a lot of the momentum, unfortunately, because they left and we didn't have it. Now we have a smaller government shutdown. We have a war, and we have 2 industries that don't agree and 2 political parties that don't agree on this. So I think, I would love to be proven wrong. It's one of my favorite things in the world, to have an opinion I don't like and to have new evidence actually prove me wrong. That would be great, but I just don't see it right now.
Yeah. Now, we have just a couple minutes left here, and I do want to just point out what I find interesting. So number one, we know oil's still up, but it's off of its highs, right? I mean, we've had a nice pullback off the highs, trading right now around $99 a barrel. But I noticed that as soon as we saw oil come down and focus kind of came back off, and people said, okay, well, oil's not back. It's not at these highs. What ends up happening? We start to see the software stocks, which, remember, before this all happened, there was a lot of concern about the massive spending and whether or not loans were going to go bad, the private credit markets. And like, you look at Oracle, I mean, remember the stock markets had a 7% rally, and Oracle's literally back to its 52-week lows and down 2 days in a row when the stock market's up. You look at Microsoft, I mean, MSFT, but one of the biggest companies here, gapped up yesterday, closed flat, down today. And I do think that, again, like you guys have been saying, it's not just, people are saying, oh, yay, there's a ceasefire, but it's like, that wasn't really the only problem in the system. There's so many problems.
There's also not a ceasefire.
Right.
We might not be dropping bombs, but there's still a war raging.
That's true. That's true.
Yeah, well,
and is the Strait, I don't even know. I don't think does anyone know if the Strait is even open at this
Apparently,
point?
It's not open.
I've read a few statistics. A lot of these ships have their transponders off. About 10% of normal volume is actually going through the Strait. A decent amount of Saudi Arabia oil is going through pipelines to the Red Sea. And it depends on how much that is. But you said, Scott, some of that infrastructure has been hit. But the bottom line is, this is a complete failure so far. Yes, Trump's going to point out what happened. But the whole idea, I'm almost certain, was for them, the leadership to say, Uncle, we give, we'll bring in, just like it happened in Venezuela. That's what's failed so far. This is a quandary. This is a quagmire that
it's not happening there. These are not the people that
Right.
are going to do that. If they thought that was going to happen, they miscalculated, because every bomb the United States drops helps their narrative.
That's true. That's true. All right. Well, it is 3:30. Let's call it a day today, gentlemen. It's been an awesome discussion. And I think next week we might have a guest on as well with us. So that'll be exciting.
Nice.
And
Awesome.
we'll be back next Thursday, guys. Thank you all. Follow these gentlemen. You can see their X handles at the bottom. And we'll see you next week. Take care, guys.